But another down day in China is looming over U.S. markets.
Stocks closed down for the fifth day in a row on Wednesday, erasing all growth and the world's second largest economy has seen this year. Seth Doane joins us now from Beijing. What is China doing, Seth, to regain control of its economy?
Well, over the last couple of months, they've done quite a bit when it comes to the stock market. Goldman Sachs estimated that they pumped around $145 billion. The Chinese government pumped around $145 billion to shore up this stock market, which has dropped so much it's erased all of the gains so far of 2015. What's really interesting is we have not seen much reporting in the state media now on the crash, but it was the state media that had really first encouraged people to get into the market in the first place. We printed out the front page of the People's Daily. This is the Communist Party mouthpiece, obviously just a PDF of the front page today. Not a single mention of the crash.
Seth, let me ask you, how is this affecting the credibility of China's President Xi Jinping?
Well, they put a lot of oomph behind this, as I mentioned, in these state media publications, encouraging people to invest in the stock market. And people were watching it go up so significantly over the last couple of months. It reached its peak in the middle of June. So now many of the Chinese people who are invested in the market say, OK, Chinese government, you encouraged us to get involved. Now do something, try to stop this. And that's why we've seen them take so many different measures to try to stem the losses here. Most recently, just this week, of course, cutting interest rates and also lowering the ratio of money in reserve, in essence, that some of the reserve banks need, freeing up some of that money for lending.
Seth, is this giving China's growing middle class a reason to doubt their government?
Well, about 80% of the investors in the stock market are so-called mom and pop. They're average Joe investors, many of whom borrowed money and bought stocks on the margins as these stock prices were increasing so much. So yes, it is the average middle class that is affected here. And we've spent some time in these brokerage houses and talked with investors who in some cases don't want to go on camera because they're too ashamed they've lost too much. They say we've lost, some people told us, between 30 and 60, 70% of savings in some cases.
All right, Seth Doane, thank you so much.